Okay, right. And here we have the schedule. In the second video, we have the schedule. Like I said, of course, we have this tax adjusted um, trading profit. Of course, this has been adjusted, and capital allowances. Yes, capital allowances have been deducted here in this very first bit here. Interest income. So we're talking about yeah, we'll see examples of that. I think in this chapter towards the end. Bank interest and other interests that are non-trade, so non-trading relationship type of interests. And property income, of course, no problem. Chargeable gains, of course. I talked very briefly about this in class, the fact that this chargeable gains has this whole idea of indexation. Do you remember? You might have seen things like this. We'll see it again when we talk about capital gains. But the fact this is indexed and deflated, if you like, for excess inflation, if you like, over the years. And then miscellaneous income, we tend to think of this as royalties, but you rarely get anything along these things. Okay, great. So we have total profits. Then I highlighted this idea of qualifying charitable donations. What you tend to find is that these donations have been made, or of course have been made as part of trading profit. When I say as part of trading profit, in the accounts you will see them. So you might see a payment, if you like, to a national charity, or something in here. So really the argument is we're like, no, it's not technically allowed. It's not a trading profit. Sorry, it's not a trading expense, but it is an allowable deduction after total profits. And we'll see why this makes sense when we come to the next chapter. But we do not allow national charity donations. So local donations, yes, but national charity. Okay, great. Let's carry on. So there was in class. I think I made a little. Let's see. Let's talk about these ones. Yeah, I made a little movement. I'll talk about that now. So I think we were quite happy with this idea of capital allowances deducting them. As usual, nothing dissimilar to the individual. So the sole trader, we always add back disallowed expenditures and deduct capital allowances, of course, and we would add back any sort of, if you, it says add back disallowed expenditures and deduct. So for example, non-trading income that's taxed elsewhere. So we saw examples, especially with bank interest and rental income and property income and things like that. Then you have to, of course, adjust. We're going to tax them. It's just that we don't tax them within trading profits. Yes, we don't tax them within trading profits. Now, this is where I erred, if you like, where we're talking about private use adjustments. And there's a question you'll see where an employee gets a full benefit, or the company pays. I think what I wasn't watching when I was looking at the question, I didn't really focus on the question that the company had paid for the full amount, so the employee had enjoyed a private benefit. So I was treating it as though the invoice had arrived and we hadn't put it through yet. But in this question, you'll put it through, the company's put it through. So in effect, the employee has now enjoyed the benefit. So the key point here is that it's okay for a company to put through expenses on behalf of an employee. The employee will most likely be subject to some income tax and NIC. So there's no need to split or separate out the private use, because as long as it's required, the employee will and suffer, so to speak, the benefit via a tax. Yes, if you remember when we talked about taxable benefits. Right. So then, of course, capital allowances, again, like we said, on each chargeable accounting period, they can't exceed 12 months. Dividends are what they are. We cannot, in terms of dividends paid, these are profits, so we allow those as deductions, of course, because that's profit. And we just need to be careful. We'll see in a second how we're dealing with interest. Only trading interests and trading, if you like, trading interests can be deducted from trading income. Otherwise, all the rest has to be dealt as non-trading activities. Yes. And there's a good question here. I suggest you do this question. I think you should be all right with all of them. I want you to focus on this motor car expense, and you will see here that it says that, let's look at the note. I'm just going to highlight the note. Yes, here we are. So this note really is an important note. If you remember from our earlier discussion when we talked about storage, it says the hire car. you have this car that has a CO2 emissions of 145, which is greater than 130 grams. Now, if you remember, with higher cars, we can only put through, the government only allows us to put 85% of the costs through. So you can only put through 85% of the cost. Great. Now, the full cost can be put through, and the employee will enjoy a benefit, if you like, a private benefit on his, if you like, on his own payroll, on his own PAYE, right? So you don't have to split this up by the 75 and the 25. No, put through the full 85% because it's fine. You will enjoy a benefit, if you like. That's kind of the key point with that. But the rest, I think you should be fine with it. So please have a go at example 2. I think that's a good place to end the second video because the next video moves on to a different topic. I don't know if you remember, just as a little clue, remember we never ever give food away. This is never allowed. Any type of food is never. Yes, you have, it says 4 pennies each bearing the company thing, and that's fine. But look through and see if you can remember for yourself. The other thing is here, just here, and I feel like I am answering the question. Bonuses are only ever recorded in the period in which they are paid. So here they have accrued bonuses, but we only record bonuses in the period in which they are paid. So have a go at this question if you haven't done it. If you're in class, you're fine, you're done. You can just move on. But if you haven't, please go through that. Okay, great stuff. See you in the next video.